What is an initial public offering, often referred to as an IPO? Well, an IPO in the simplest terms is the process in which a private company offers its stock to the general public through a public stock exchange, usually for the first time. You might be wondering, where does this process start? Well, it begins when a private company hires one or more investment banks. This bank or banks are referred to as the underwriters. Working with the bank, the company then sorts through all the details such as how much money they're trying to raise and how many new shares they will offer to the market. Now, during the pre-IPO process, the company will put together an initial registration form that they submit to the Securities Exchange Commission, the SEC. This form is often referred to as the S-1. And within this form, the company details its business model, management, the current financial condition of the company and its competition, stock terms, dilution, how they plan to use the capital being raised from the IPO, and so much more. The S-1 is a publicly available document that is typically released a few weeks before the IPO. And this document can help investors decide whether the offering is a good investment for them. But that's not all that happens during the IPO process. The company will also go on what is called the Roadshow. During the Roadshow, their company will open up the books to institutional investors to create interest in their stock. And in return, those institutional investors then share their indication of interest, which helps the investment bank determine where to list the price of the stock in the IPO. And then it happens. You get to IPO day. One of the most exciting days of a company's life, and a very important accomplishment for the early stage private equity investors, who are one step closer to securing their return on the capital they've invested. On list day, the shares begin trading on the public market, initially at the IPO price, and then freely based on demand by investors through various brokerages. Now, IPOs tend to generate quite a bit of media buzz. So even though the market opens at 9:30 a.m. Eastern Time, some IPOs don't actually begin trading until hours after the opening bell due to such demand for the stock. Take the company Snowflake, for example. The investment banks working with Snowflake priced the shares at $120 per share. But by the time the stock opened to the market, the shares were already at $245 per share. And then the share price climbed to about $254 by the end of the day, instantly making the company 5 times more valuable than its most recent valuation just 7 months earlier. Other examples of red-hot IPOs include Facebook, DoorDash, and Airbnb. The volatility of IPO day can go either way, and that's what makes it so exciting for all parties involved. If you want to know more about companies that are going through the IPO process, Seeking Alpha offers a free daily IPO newsletter for investors that provide analysis and news on both pending and recent IPOs. If you're interested in receiving this free newsletter, click the link below this video right now.